There's been a lot of talk around the big returns for tech stocks, a little less talk around the hot performance from casino names. But since the lows for the S&P 500 late last year, casino stocks have been some of the best performers. Names like Caesars, Las Vegas Sands, MGM up in the neighborhood of 60% off those lows. Some earnings from some of the industry players around the corner. Let's talk a little bit more about what's happening with this group. Chad Beynon is an analyst with Macquarie, and he joins us with more. Chad, nice to have you with us. I guess let's start with what drove those returns off the lows from last year.
Sure. Thanks for having me. Yeah, I'd say the big move has been really kind of a recognition that this new sports betting, online gaming business model is actually working. 2021 and 2022, these companies spent hundreds, if not billions of dollars acquiring customers and marketing. And it looks like when these companies report their second quarter, in the next couple of weeks, we'll see profits for the first time since the business has started. So that's on the online gaming and sports betting side. On the Vegas side of things, business is about 40% higher than pre-pandemic levels. And I think, as we always debate how healthy the consumer is, Vegas is certainly a place where you can push through that inflation. They've been charging a lot more on the non-gaming side, day clubs, nightclubs, room rates. You have an incredible calendar coming up with Formula One, the Super Bowl in 2024, et cetera. So I think that was kind of a recognition that the consumer is strong and they like experiences, and gaming has been a sector that's benefited.
And Chad, for those who are trying to figure out where the main focus of the businesses will be going forward, what kind of business mix between something like sports betting and the traditional trip to Vegas do you anticipate for this sector?
Yeah, globally, we think it's about a $200 billion gross gaming revenue market. That's land-based and digitally. Digitally, you're going to see a lot more growth over the next couple of years. So North America should grow anywhere between 25 and 30% per year, probably through 2030. So that's going to start to catch up with the land-based business. The land-based business is still extremely alive and well and very profitable for these companies. That kind of leads us to one of our top picks, MGM. We think MGM has a really good mix currently of Vegas, 50%, domestic regionals, about 25%, Macau, 10%. That's kind of on the recovery as well. And then digital. So digital will be the area that takes more share. What we've seen is in markets that legalized iGaming, very little cannibalization. So consumers still like to go to their local casino. And then when they're at home, that's kind of an additional spend on their experience dollars.
And since you mentioned Macau, maybe you can let our audience know which of the casino players have made the biggest bets on China's market.
Sure. So Macau went through a very important decision in the fourth quarter. In December, all 6 concessionaires, so the operators, received a renewal for their availability to operate in the market. So that was a big concession renewal for 10 years. With that, they have to invest a little bit more on the non-gaming. Macau has always wanted to look a little bit more like a Las Vegas or an Orlando, just in terms of business travel, in terms of non-gaming versus gaming. And that's certainly a goal of Macau. So since it reopened in the first quarter, results have been okay. We haven't seen the recovery from that base and premium base customer as we would have thought. Other markets globally, we kind of saw that customer come right back. And I think part of that issue is mainly just because of visa and bottlenecks that will kind of work itself out in the next couple of quarters. In terms of exposure, Las Vegas Sands is our top pick in the market. They derive about 3/4 of their business from Macau and 1/3 from Singapore. Singapore is back to pre-pandemic levels. Macau is on the upswing, and Las Vegas Sands has the most hotel rooms and the most table games in the market. So we think as the market recovers, they will be the benefactor. They just announced a return of their dividend, and pre-pandemic, they paid the best dividend within the gaming space. So we think that this will be a name for large cap dividend investors to come back to, and that's our top pick in Macau.
So you mentioned Las Vegas Sands, which you like. You mentioned MGM, which has more of that Las Vegas exposure, which you like. Caesars is another name you like. Outside those big names, are there regional plays that you're watching?
Sure. Yeah, in the regional market, Penn Entertainment is one that we like, and that's probably one that's not in the favor camp from a lot of investors at this time. They operate about 40 properties around North America. They're the leader in margins. Very well-run company. Within the last 2 years, they made two major acquisitions. One for theScore, which has just been integrated from a tech standpoint down here in the United States. And then the second for Barstool. So between those two acquisitions, Barstool and theScore, they spent about $1.5 billion. This is a $4 billion market cap company with market leading properties and really good cash flow on the regional side. And we think the business on the regional side is currently ascribing anywhere between $20 and $30 of value. Penn's right in the middle there. And then you're getting the digital business and Barstool for free. We'll hear a little bit more about that this upcoming quarter, but it's really the start of NFL season where we see if the tech integration works for consumers. That's been a slightly disappointing, but I still think this is a really good regional name with an opportunity to potentially double if they get theScore and Barstool right.